Volatile day on Dalal Street today with key indices trading in a narrow range. Infosys, HDFC and TCS drag. HUL, ITC and ICICI Bank back for the bulls. In mid-cap index outperforms today.
The Sun Pharma stock sees a sharp recovery. The management tells cnbc TV 18 that they have received and responded to 2 queries from the SEBI. No clarity on whether the queries are related to the whistleblower complaint.
SBI chairman is likely to meet the SEBI chief in a bid to revive Jet Airways. Important on the agenda is a request for pricing relaxation under SEBI's acquisition code, and that's a cnbc TV 18 exclusive.
ICICI Pru takes a big knock on a top-down miss in earnings. The gross premiums, new business and margins see a contraction. HDFC Life too reacts negatively to weak numbers.
The immediate concerns have to do with China, and I think that is possibly being underestimated by the market.
Morgan Stanley's Ruchir Sharma says that a major slowdown is unfolding in China and the US, adds that a US-China trade agreement won't stop the deglobalization. Hello and welcome. You have joined us on Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. So it has been slightly choppy in a tight range as far as markets are concerned. The key indices are concerned, and at the moment both Nifty as well as Sensex shedding some bit of gains and coming off the top point of the day. So definitely now slipping into the red. Sensex just about that, and Nifty 50 is on the flat line. As far as the mid-cap index goes, that's outperforming the key indices today, 0.35% up, and it's the Bank Nifty which has also shed a part of the gains today but still maintaining the green. As far as advanced decline is concerned, take a look at that as well. Pretty much neck and neck at this point. Also, the overall market has been showing some bit of weakness in lunch hour. Sonia.
Oh, yes. In fact, it's just quiet, right? Just consolidating around these levels. But the one pressure pocket definitely is the IT space. So there is TCS, there's Infosys, and a whole host of other IT stocks that are dragging the markets lower now. But the 2 stocks that we're looking at, ITC ahead of its results is doing pretty good. In fact, I think a couple of more numbers trickling in now. Vijaya Bank's numbers are just going to flash for you on your screen. That stock will be in focus as well. We'll get to that in greater detail. In the meantime, insurance companies HDFC Life and ICICI Pru are trading in the red on the back of Q3 results, with ICICI Pru down more than 10%. Abhishek joins in with a quick roundup of what happened there. Abhishek.
Well, actually, the valuations that insurance companies commanded due to the robust growth seen last year is now tapering off, and that is what brokerages are noting. So for HDFC Life, although the top line growth is a positive sign given the fact that gross premium is up 27% YOY and about 2% quarter on quarter, it was largely led by the new business premium which grew by 37% YOY. But the margin, the value of new business margin declined by 50 basis points on a quarter on quarter to about 24%. It remains elevated. Persistency ratio in the 61st month bucket has actually declined by 336 basis point YOY. So CLSA has reduced their estimate on value of new business by about 4 to 9% for FY20 and 21. They have cut down their target price to about 475 from 510. MK has also downgraded the stock to accumulate, and they have cut the target price to about 450 versus 465 earlier. On ICICI Pru, it's a top to down miss that has been seen on the results. So gross premium is up 10.5% YOY, but it is down about 1.5% quarter on quarter. The income was largely driven by group insurance business, and the value of new business margin, which is one of the lowest in private sector, further declined by 50 basis point quarter on quarter to 17%, and the persistency ratios have also declined. You have seen a huge downgrade by brokerages on the stock. CLSA maintains the buy, but target price reduced to 430 from 450. Jefferies has downgraded the stock to underperformance versus hold earlier, and MK has also downgraded to accumulate, while Investec also reduces the target price on the stock. Back to you.
All right, thanks for that analysis, Abhishek. Well, our colleague Yash Jain caught up with Vibha Padalkar, who's the MD and CEO of HDFC Life, and she says that the company expects to beat the industry growth going forward.
We expect to comfortably beat total industry growth like we have been doing so far. Difficult to give a particular number because still the markets are continuing to be volatile. There is, let's see what comes out in the budget. So for example, an NPS announcement that we are expecting, and given that we have an NPS subsidiary which feeds into our annuity, can make a very significant difference, but comfortably beating industry growth. We expect to see all the channels that typically sell protection. So this starts off from our direct channel, a direct and online channel, which are continuing to go very, very strong on protection. Second is our agency channel, which has been selling about 12-13% protection. That also has seen a clip of 15 to 17% growth, and that should continue because of the agency life that we embarked on. And thirdly, our bancassurance also, the protection percentage has doubled from last year. So all channels are firing in their own way. So no reason to believe that our protection share should not be strong. So that we would expect that to continue to remain strong.
Okay, well, those are Vijaya Bank's numbers. They don't look good, actually. The asset quality has deteriorated quite a bit, and that's the reason the stock is under pressure. It's, in fact, just fallen off a cliff there. The gross NPAs have widened to 6.14%. In fact, the absolute amount of gross NPAs has gone up to 8,140 crores. This compares to 7,557 crores last quarter. So that's a 7.5% quarter-on-quarter jump in gross NPAs that we're seeing. Even the net NPA number has risen quite a bit, both quarter-on-quarter and year-on-year, to 5,295 odd crores. Provisions also remain at elevated levels, 580 crores over there. So not looking good for Vijaya Bank. Asset quality deterioration for that bank. But moving on, here's a CNBC TV 18 exclusive news break. Sources say that the SBI chairman is all set to meet the SEBI chief on the proposal to revive Jet Airways. Lata is out tracking that story. She joins us on the phone line with all the details. Hi Lata, when is this meeting going to take place and what is on the agenda?
The SBI chairman is meeting the SEBI chairman because they're not able to get a better deal, it appears. That they are refusing to give anything more than 150, which militates against the substantial acquisition of shares and takeovers code. If you go by the high-low of the last 6 months, it should have been 262 rupees. But it's 150, and that's the offer, take it or leave it. They also want, Jet Airways shares to be pledged. Only then they will be releasing this $45 million. So clearly they want Naresh Goyal and related parties to not have any substantial say in it.
All right, thanks so much, Lata, for getting us those exclusive bit of information on Jet Airways. On to some global market opinion then. Ruchir Sharma of Morgan Stanley Investment Management says that a major slowdown is unfolding in the US, and he adds that the market has been underestimating China's slowdown concerns. Here's an excerpt of that exclusive conversation.
Talking about a complete recession out here in the US, but a major slowdown unfolding as the stimulus measures fade. But I also feel that the interlinkages are seriously underestimated compared to what they used to be. I mean, in late 2015, early 2016, when you did get a very serious global slowdown, it did impact the US much more until the Chinese were able to do a massive stimulus, and that helped global growth, including US growth. So I don't sort of agree with this very insular argument that the US is going to sort of remain completely protected by these great oceans and, it'll continue to sort of ride its own theme. I personally feel that the risks are really there. In China, all the reports from the ground suggest that a very serious slowdown is underway. And the more sort of worrying aspect is that there's really not that much that they can do out here, because US interest rates and Chinese interest rates now have converged. And for them to cut interest rates further from here to stimulate the economy poses a very serious risk to the currency, and they don't want that to flare up as well. So it puts them in a much tighter spot than they have been in the 3 other instances this decade when they have rolled out a massive stimulus. Markets have now gone into pricing a lot of some sort of a trade agreement compared to expectations of virtually nothing happening in, let's say, October, November last year. So I think a lot of that now is getting priced in. But I think that there's a more fundamental issue out here, which is that regardless of what happens on this trade front, we are in an era of deglobalization. The world is sort of getting much more split into regional blocks, and barriers are going up everywhere. And I don't see that changing with one US-China trade agreement.
Okay, so that's Ruchir Sharma saying that, you know what, the Chinese problems will not, it will have a ramification on other countries, and no country will be shock absorbed from the problem that we're seeing in China. Let's take a short break on that note. Up next, ITC and Interglobe Aviation will report their Q3 numbers today. Key expectations on the other side.